Assalamualaikum and selamat sejahtera. I am Puan Suryani Abdul Rahman from Faculty of Accountancy, UiTM Perak, Cawangan Tapah. Welcome to the Financial Accounting course. So today we are going to learn on chapter number 1, that is Introduction to Accounting. Okay, let's move on to learn about the learning objectives. At the end of this course, we hope that the student should be able to achieve all these 4 learning objectives. They are: number 1, to explain definition, functions, objectives, and uses of financial statement. Learning objectives number 2, students should be able to differentiate between accounting and bookkeeping. Learning objective number 4, students should be able to identify different groups of users and their use of the financial statement. And the final learning objectives, the student should be able to differentiate between accounting and bookkeeping. Okay, firstly, let us learn what is meant by accounting. So based on this definition, accounting can be defined as a systematic process of classifying, recording, followed by summarizing transactions and business events in monetary terms, and interpreting the results to interested users to enable them to make economic decisions. So here, class, we can see that accounting involves 4 main stages. What are they? First one, classifying, followed by recording, then summarizing, finally interpreting. Therefore, based on this definition, we can say that this accounting is kind of a process by which the financial information about the business is being recorded. Okay, the process here being recorded, and then that information is communicated to the users who wants to make the financial decision. The information communicated here can be used for evaluating the performance of the business. In other words, accounting is also referred to the language of business. Okay, class, I would like to share with you an infographic to explain what is accounting is all about. So we start with the entity. The entity here is referred to the business. So imagine that now the business is start to operate. So when it start to operate, it will have few business transaction here. Okay, for example, like purchase of goods, and then transaction regarding to renovate the business shop, or transaction regarding sale of good to customer. So what do the business need to do with the business transaction is that this business transaction will go for the process of accounting. So here we will classify, okay, the business transaction, followed by recording, and then we go for summarizing. So the financial information extracted from the business transaction will go for this process and summarize it into a meaningful accounting data, which then will be interpreted to the users of the accounting information. So after the summarizing, the information will be interpreted by the accountant to these users so that the users of this information can make a soundful decisions. Okay, class. Have you ever heard the word bookkeeping? Maybe some of you have heard the word bookkeeping. And maybe some of you think that bookkeeping is the same as accounting. So let us look further to find the answer. Bookkeeping is only a part of accounting. So here we said that a part. So it is just a subset. Okay. Which stress on the recording of business transaction. Further, it is the activity of keeping full documentation of every single financial transaction of the entity to form a base for the accounting process. So, does bookkeeping is the same as accounting? The answer is yes. The answer is no. Bookkeeping is different from accounting as it is only a part of accounting. In other words, bookkeeping is referring to the process of classifying, recording, and summarizing transactions systematically only. Okay, so you must take note that bookkeeping is only a part of the field of accounting. Okay, let us look further. What makes bookkeeping different from accounting? Okay, firstly, bookkeeping is different from accounting because bookkeeping is only the first step to accounting. So here bookkeeping only involved in the task of keeping proper records of the financial transaction. On the other hand, accounting is a complete procedures which start from the recording and transaction and ends on reporting of the financial statement to the interested users. So as you can see that here bookkeeping is referring to the need of recording transactions systematically, whereas accounting involve until the end of the stage which is reporting the financial statement to the interested user. Lastly, the task of bookkeeping is performed by a bookkeeper while the task of accounting is performed by the accountant. Okay, let me show you here some of the people behind the task. First, we have bookkeeper. So as mentioned just now, bookkeeper is the one who is responsible for classifying, recording, and summarizing the business transactions systematically. Next, we have the accountants. So accountant is the one responsible to prepare and interpret the financial statements to the interested users. And we have another person who is called as auditor. Auditors can be internal or external auditor. Internal meaning person who is hired by the business within the organization. The external is the auditors attached with other organization but being employed by the business. Alright, so what is the task of this auditor? The auditor is responsible to review the company's book, the financial statements, and look for any errors or discrepancies for the company to make improvement. Okay, let's continue on this diagram. This diagram refers to the accounting process or the accounting cycle, which has been translated from the definition of accounting. So here we have several steps that resembles what accounting is all about. First of all, we will start by identifying the economic activity happen in the business. So the economic activity here has been translated into what we call as a source of documents. The example of source document are invoice, bills, receipts, debit note, credit note, and vouchers. As an example, if the company purchased goods from supplier on credit terms, so the company will have invoice as an evidence of the business transaction. So that invoice is called as source document. So the accounting process starts with the recording of the business transactions which have been recorded in the source document. The transactions are then classified and recorded in the appropriate books of prime entry or called as journal. So we have several journals here. For example, like general journal, purchase journal, sales journal, written inward journal, written outward journal, and cash receipt and cash payment journal. So the process of recording the transactions from the source document into the journal is known as journalizing. Okay, it's known as journalizing. Okay, in the next step, after the transactions are recorded in the journal, the total or the amount will then be posted appropriately to the ledger. The ledger here also refers to the accounts. So the process of transferring the amount from journal to ledger is known as posting. Ledger can be classified into general ledger, sales ledger, and purchase ledger. Okay, next, what happened? At the end of the month or at the end of any accounting period defined by the business will prepare the trial balance. How to prepare the trial balance? The business will extract all the balance from the accounts or the ledger and list it down in a document or in a statement called trial balance. Okay, the purpose of preparing this trial balance is to check whether or not the transactions have been recorded correctly in the first two books of accounts. So if there are any adjustments to be made, for example like errors, okay, then adjustment need to be made at the end of the accounting period. Usually the adjustment involved for business are such as accruals and prepayments of revenue and expenses, the provision of depreciation, and etc. Alright, so after we have record the adjustment properly, we will prepare another trial balance called as adjusted trial balance. So we will post all the balance into this adjusted trial balance. Next, what we are going to do is that we will extract all the closing entries from the adjusted trial balance to be recorded in the financial statement, where our final destination. So the final destination here is the financial statement, which can be prepared by obtaining the information which has been listed from the trial balance. The financial statements for your level will include the statement of profit or loss and statement of financial position. Okay, before we go further about the component of financial statement, let's take a look on the objective of financial statement. The objective of financial statement is to provide information about the financial position, financial performance, and changes in financial position of an enterprise that is useful to a wide range of users in making decision. So this is the importance. Why do the business need to prepare the financial statement? Because financial statement can be used as a tool to measure the business financial position and performance so that the users can make their economic decision. Okay, so what is financial statements? As you can see from the definition, financial statements are written and formal records that convey the financial activities and condition of a business. Basically, there are four major components of financial statement. Firstly is the balance sheet. Balance sheet is also known as statement of financial position. Next is the income statement. Income statement is also known as statement of profit or loss. Another component is called as statement of shareholders' equity, and then followed by statement of cash flows. But for your level, okay, we only learn on 2 out of the 4 components. They are statement of financial position and statement of profit or loss. As mentioned earlier, the component of financial statement for your level will consist of the statement of profit or loss and statement of financial position. These statements are prepared by the business at the end of its accounting period. The accounting period of business is determined by the business itself, and using under normal circumstances, the accounting period does not exceed 12 months. Let us look further the content of statement of profit or loss, or known as income statement. Okay, basically, the purpose of preparing the statement of profit or loss is to show the financial performance of the business over a period of time. Therefore, SOPL or statement of profit or loss will show the revenue and expenses of the business. All income and expenses pertaining to the purchase and sales of goods, as an example, are recorded in the statement of profit or loss. The purpose of listing the revenue and expenses of a business is to calculate whether the business will have the net profit or net loss. So how to determine the net profit? So to determine the net profit, the business must match the revenue and the expenses. If the revenue is greater than the expenses, then the business will have net profit. But if the other way around, where the expenses are more than the revenue, the business will have loss. Attached here is the sample of statement of profit or loss or income statement which has been prepared at the end of the accounting period. So we start with the first section, that is to derive the net sales. Okay, what happened next is we need to match the amount of net sales with the amount of cost of goods sold to determine whether the business has gross profit or gross loss. So here, the gross profit will derive if the net sales is greater than the cost of sale. Okay, so we will have profit. However, if the net sales are less than the cost of goods sold, the business will have gross loss. Okay, next, move on to the next section. The gross profit earned from this section will be added to the other income or revenue, while the gross loss will be reduce the income of the business. Here, if the total income is more than the operating expenses, then the business will have net profit. Okay. However, if the total income is less than the operating expenses, the business will have net loss. So please take note that the profit from this statement of profit or loss will be transferred to SOFP or statement of financial position, where the profit will be added to the capital of the business. As for the net loss, it will be deducted from the capital of the business. Another component of financial statement of business is statement of financial position. So basically, the purpose of preparing the statement of financial position is to highlight the relative strength or position of a business at a point in time. In details, the purpose is to show the financial position of business in terms of its assets, liabilities, and capital or owner's equity at a certain date. Okay, talking about asset, these assets can be categorized into non-current assets and current assets. Okay, the non-current assets are those assets which have a useful life of more than 1 year. The examples of non-current assets are plant and machinery, land and building, motor vehicles, and long-term investment. While the example of current assets are inventories, account receivable, and cash. Similarly, liabilities can also be categorized into non-current liabilities and current liabilities. Non-current liabilities refer to liabilities that are payable after 1 year. Example are loan from bank. Whereas current liabilities refer to liabilities that are payable within 1 year. This includes the accounts payable or creditors or bank overdraft. Okay, as the owner of equities, it refers to the capital at the beginning of the period, additional capital contributed during the accounting period, and net profit obtained for the period. And if the business made any drawing then will be deducted from the amount of the capital to get the owner's equity at the end of the period. Attached here is the sample of statement of financial position which has been prepared at the end of the accounting period. So here we can see that the statement of financial position will show the status of the assets, okay, followed by the owner's equity, and also the position of liabilities. So at the end of the year, the users will know about the financial position of the business in terms of its assets, liabilities, and owner's equity at a certain date. As mentioned earlier, one of the main functions of accounting is to provide information to the various users for helping them to make economic decisions. So here, we can see that the users of accounting information can be divided into two categories. They are the internal users and external users. So who are the internal users? Here, the internal users refer to those who work in organization or in the business, such as the managers, the owners, and also the employees. Okay, on the other hand, the accounting information can also be used by the external users. Who are the external users? The external users here refer to those who are indirectly involved with the business, such as the investors, the creditors, the suppliers, the customer, the tax authorities, and also other regulatory authorities. Okay, now let us look at the internal users first. One of the internal users is the owner. Okay, why do the owner interested to know about the financial information? Because the owner would like to know the profits earned from the investment in the business so that they can assess their financial stability and growth of the business. Alright, so the accounting will serve them some indicators on those aspects. Okay, next is the employee. So employees are also interested in the business ability because they want to know whether the business has the ability to progress and to expand or not. They would look for the steady or secured employment, earning capacity, and other monetary benefits which are to be gained from a financially stable business, such as they would like to know whether they are able to receive the bonus in this year or not. So the information that being supplied through the financial statement will serve as an assistant for them to measure the progress and the ability of the business. Okay, creditors or banker is one of the external users. Why do they need to know the financial information about the business? Because they are interested to know in the financial stability of the business, and they want to know whether this business are able to pay the amounts owing to them or not. Besides than that, we also have the potential investors. Investors will require information regarding the solvency and the financial strength of the business, because the information will present the ability of the business to provide them return on their investment or not. So that is the reason why investor is also need to know about the financial information of the business. Another external users of the financial information of business are the tax authorities and government. Why do they need to know about the financial information? Okay, as a tax authorities, they would like to know because they want to determine the taxable income of a business. So they want to know about the earning of the business for the purpose of collecting tax. And the government will eventually can predict how much funds would be made available for them for running the country. Last but not least, the customers out there are also interested to know about the financial information of business because they are interested in getting the goods at the reduced price. They wish to know the establishment of proper accounting control, which in turn will reduce the cost of production. So therefore, class, from the above explanation, it can be seen that the nature of financial statement will be very much depend upon the needs of the user for which they are prepared. Every users will have different interests. Therefore, they will use the financial information as a measurement to make their economic decision. Before I finish on this lesson, I would like to give you an assignment for you to prepare. Each student are required to identify the different types of business organizations in Malaysia. Here are some hints for you to find the business organization. There is a business which owned by a single owner. There is also a business type which owned by at least 2 owners. And there is also a business which owned by shareholders. Okay, good luck and try your best to prepare this assignment. That's all for today's lesson. Thank you for listening and see you on the next chapter. Thank you.